What's going on, my fellow wealth creators? Matty Guys here. Welcome to another training. Today, we are going to have some fun talking about how banks make money and how they make tons of it and why they have the biggest, nicest buildings in pretty much every city. And basically, it's because they're able to take our deposits. When we make a deposit into the bank, they pay us 1%, historically less than that. It's a little bit higher right now because interest rates are high, but historically speaking, you put money in the bank, it doesn't do very much for you. But then they take that and they lend it out at, say, 5%, and so now they're getting that positive arbitrage, and that results in 3, 4, 500% rates of return for the bank, which is why they're just so enormously profitable. But the main point of this video is to show you how we can do the same exact thing, guys. How we can mimic exactly what the banks do so that we can also get 3, 4, 500% rates of return. And I'm going to show you a real life example of an investment I made from my infinite banking policy that resulted in over a 500% rate of return. These things it's just incredibly powerful. And it was such a pivotal moment for me when I learned what I'm about to show you. When I learned this was like the main light bulb moment for me that went on. Like, I have to do this. It's when infinite banking became basically a no for me. And I wanted to get started as soon as possible because it's so powerful. And the question, it was also a little frustrating because the question that would keep coming up is like, why am I just now learning about this? Why is this not taught in schools? Why is this not taught early on in life? Because it's so powerful and would have such an incredibly positive impact on people's finances, thus a very positive impact on their lives. But when you really start to think about it, the banks, the system in general, profits on our ignorance. The less financial education we have, the more money the system makes off of us, and vice versa. As we increase our financial education, like learning how to mimic what banks do, we now become less reliant on the system and their specific products and services that are designed to extract as much wealth from us as possible. And now we're able to take more control of our finances, and they don't make as much money, right? So it's an inverse relationship when it comes to financial education and how much money we're able to keep, how much the system makes off of us, etc. So I'm going to take you to my whiteboard. I want to map it out, give you some visuals. We're going to go through some numbers. I'm going to break down the exact investment that I made using my policy that resulted in a ridiculous rate of return, all right? And hopefully by the end, you're going to have a good idea of how this process works so that you can make an educated, informed decision on whether or not it makes sense for you. It absolutely made sense for me. Like when you see the numbers, it's just incredible. So anyways, if you find the video helpful, just my only ask is to hit that like button and check out the additional resources in the description as well. I'm going to have some additional training and things like that on infinite banking to help you along your journey. All right, so let's go over to my whiteboard and let's have some fun.
All right, guys, let's have some fun. Let's talk about how banks make their money. We're going to use some examples here, some different numbers. The numbers don't really matter. I mean, you could really apply this to you could change the numbers up however you want, but we're just going to keep things simple. And then we're going to talk about how we can do exactly what I'm about to show you the banks do. Like we can actually mimic that through the infinite banking concept using dividend-paying whole life insurance policies. And I want to show you a real example of a deal that I did and the 528% rate of return that I made using the exact strategy that banks use in order to make their money. I set up my own private banking system with a dividend-paying whole life insurance policy, and I use it the same way that the banks do. Well, not whole life insurance. I'm saying I utilize it in a way that mimics how banks make their money. So let's start with that. All right, so here we are. We have a deposit, let's say of $1,000 that we want to make to the bank. Okay. Here is the bank. Okay. And let's say they're going to pay us 1%. All right. And what's going to happen is once we make that deposit, they're now, based on their reserve requirements, they're going to lend out about $900 at 5% to be like 4 or 5%. To this person over here who wants a loan for whatever reason. Maybe it's real estate, etc. So what's going to happen is this person is going to pay the bank, I think that's $45. Okay, 5% of 900. And then the bank is going to pay us $10. Now you might look at this and think the bank made 4%. Well, they made a 4% spread on the interest rate there. Okay, but that is not their rate of return. Their rate of return is far greater than 4%. So what we do is we take the gross profit that the bank made. Okay, so gross profit was what? $45. Okay, now there's a cost to that. So they pay us 1%. So the cost was $10. So our the bank's net profit was what? $35. Now, when we divide that by 10, the cost, what do we get? We actually get a 350% rate of return. You can actually run the math here. You can see I've already been playing around with this kind of stuff for a little bit today. But when we do 35 divided by 10, that's 3.5. We move it over 2 decimals to get the percentage. All right, I totally screwed that up, but you get the point. It's 350%. It's 3.5 times your money in this particular example. This is why. So I'll just write it over here. 350% rate of return. This is why banks have the nicest buildings in town, because they are making insane rates of return by lending out our money. See, they're not lending out their own money. If they were to lend out their own $900 in this example at 5% over a year, well, they'd make 5%. Well, which one would you rather make? Would you rather make the 350% rate of return on your money or 5%? That's why it absolutely makes sense to pay a little bit of interest in order to access and use somebody else's money in order to build wealth. Guys, that's exactly what we do with the infinite banking concept. And we utilize, let's just get a little more room here. We utilize a custom designed dividend paying whole life insurance policy. Okay, so instead of putting money in the bank, which I'm not saying to take all your money out of the bank. I would never say that. That's not what I do. I still have some money in the bank, but my safe money, my emergency money, my opportunity money, etc., the money I want to use to build wealth, I put that into a whole life insurance policy first, designed for high cash value, so I have access to the majority of my money within the first 30 days, and then I use that to go build wealth like I normally would. So let me give you a real life example here of how I recently used my policy to get a 528% return rate of return. All right, so I funded the policy first. I did 120,000 in the first year. I had access to about 105. Okay, and one of the ways that I build wealth with my policy, I'm flipping heavy equipment. I'm going to be doing private money lending and all that stuff as well, getting involved in real estate, etc. Really, really cool way to use your policy. But for this example, what I did was I purchased, I actually did 2 of these, but I'm just going to do the math for one. I purchased a piece of heavy equipment with a partner of mine. I purchased it for $21,000. He fixed it up, sold it for a profit. All right, and we made money. Okay, so the 21,000, and it took about 10 weeks, this deal, and I got back roughly about my gross profit after the split was $1,396. I'll write that out a little cleaner. $396. Okay. And the amount of interest that I paid was about $222. So I borrowed from my policy. Okay. So instead of using my own $21,000 over here, I funded the policy first. I took a policy loan at, oh, I can't write today, guys. I'm sorry. I took a policy loan at 5.5%. Now, over 10 weeks, and I'll show you the math here. So we have to get my total interest cost here. So at 5.5%, 21,000. All right, times 5.5%. Okay. If the deal took a year, it would cost me $1,155 in total interest. But it only I got the deal done in 10 weeks. So to calculate my total interest cost, I'm going to divide it by 52 weeks. All right, $22.21 per week is what I paid for interest. So if I paid that for 10 weeks, we're just going to multiply it by 10. There's my true cost of $222. So my interest cost to do this deal, my total cost of doing this deal, again, just like the banks, all right, my interest cost was $222. I made my total, let's just get a net profit here. Okay, my net profit in this example, whoops. All right, so we did, I made about 1,400, so $1,396 minus my interest cost of $222. That's 1,174. This is my total net profit for this deal. Okay, $1,174. Again, using the same exact equation here that we did for the bank. We're going to divide my net profit by my total cost to get my actual net rate of return here. 528%, guys. Now, how many times would you want to do that over and over and over again? And what would that do for the wealth building process in your life? To earn a 528% rate of return. Now, you might look at this number, oh, it's only, roughly you made $1,400. Who cares? Or, technically around 1,200 net profit, like not a big number, right? That's not going to move the needle significantly. But now what I do at this point is I just keep repeating this process over and over, and I need to figure out how to add more zeros to this. Like how do I add a zero to this number right over here? Instead of just under 1,200, how do I turn this into a net profit of 12,000, right? That's where my ability to build wealth comes into play, where my ability to network and find opportunities and learn different wealth building strategies so that I can now use this private banking system that I've put in place to accelerate the wealth building process, right? That's where that's where I come in now. Where that's why I like to say too that I am the rate of return on my whole life policy, not the, like, I'm not focused on the internal rate of return of the policy itself, which is what people get so fixated on sometimes. These policies will typically net 3 to 5% tax-free compound growth for the life of the policy. And I just consider this a bonus, guys. Like, we don't set policies up for this. Okay, it's just a bonus when we get that 3 to 5% tax-free compound growth, plus all the other benefits. And I would think, that's a pretty solid savings account, especially since we can use the money without interrupting that compound process. All right, but guys, hopefully this was helpful. This is how banks make money. This is exactly how we can do the same exact thing using a dividend-paying. What do I do? Sorry, I'm still getting used to my whiteboard here. Dividend-paying whole life insurance policy. Right, we can mimic what the banks do and create significantly higher rates of return in our lives, in our wealth building process, plus all the other benefits that we get from these policies. They're just absolutely incredible. So anyways, I hope that was helpful. If you guys have any questions, any feedback, drop them down in the comment section below, and make sure you take advantage of all the additional training I have in the description for you. All right, hope you guys are crushing it. I will talk to you in the next one. To your success, Matty Ice is out.